welcome to this November 12th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at Lennox International, ticker symbol LII. This is about a $2.2 billion industrial company. The chart only goes back about 8 months, but prior to this run, you can see that Lennox had come up to about $50 a share. This run actually started back in November of 2008 from $19 a share. So the stock had made a huge run over about a year and a half, and then from this point in April, where it hit $50, it has since kind of been going sideways, a slight downward bias in this descending triangle formation, but normally I'd rather see an ascending triangle, but descending triangles can also be continuation patterns. Taking a look here, you can see right off the initial drop down, we went down just below $40, held, bounced back up, and that started a string of pushes down to the $40 area. But notice we have yet to have a close beneath $40. So $40 seems to be a pretty significant price support level, and given that we had such a huge uptrend prior to this consolidation period where we formed this triangle, I think that LII has a pretty decent shot at eventually breaking out to the upside. Now the trend line that has been formed here during this triangle, in order to get through, we're going to have to close at about $42.50 to $43 or so, maybe a little bit higher, and with that we need to see some additional volume coming in on that move to the upside. That would confirm the breakout. To the downside, we're watching $40. Close below $40 with increasing volume, we wouldn't take much of a chance here. We'd probably move back to the sidelines because this $40 level has held on so many occasions that we'd be a little concerned that the selling would escalate if in fact we did fall beneath that level. So watch $40 to the downside. Top side again, $42.50 I think is going to be a key, maybe up to as high as $43. If we can get a close in that area or above with increasing volume, I think that would bode well for the stock down the road. During this entire consolidation period, really, except for the initial major push back in early May to the downside where RSI went down to 30, for the most part we have been holding this RSI 40 level, which is important because normally in uptrends your RSI will hold above 40 and eventually hopefully move back up to around the 70 area, but obviously we're going to need to get a breakout out of this triangle first for that to happen. So I'd continue to watch this $40 area. As long as that holds, RSI holds up above 40, I think this one has a chance to make a push to the upside. The good news is if it makes this breakout above $42.50 to $43, you have about $10, maybe even $11 from the top of the triangle to the bottom. So when you break out above, say, $43, tack on 11, that takes you up to about $54, which would be the measurement here on a breakout. But you do need to get we need to see that breakout on a close, and we need to get that confirming volume. But so far, I think the stock looks pretty good. The consolidation has been taking place over a long period of time. That will make any breakout, should it happen, even more valuable from a technical perspective. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.